Hello, it's Robert Miner with Dynamic Traders Group with this week's brief video update with a couple of trade strategies for the week beginning April 27th. That's beginning this coming Monday. As always, this is just a brief update with a couple trade strategies, a couple markets you should be aware of. And of course, if you want to learn more and get a constant education and constant daily updates for the best trades available, is check out our reports at dynamictraders.com, or DT reports. And if you want to learn quite a bit about practical trade strategies, check out my book, High Probability Trading Strategies. So one more thing before we begin, I'm just going to give you a short pitch on the long-term report and the bear markets and panic cycles of the last 120 years. You can download it absolutely free at dynamictraders.com/panic-cycles-March-28-2020. Go to that page. You can download the printed report and see the video if you haven't already. Really important information for the weeks and months ahead. Okay, let's get started. Let's take a look at the stock indexes. This week I'm showing the Dow Jones. Of course, all the indexes basically do the same things. The reason I'm showing you the Dow is I use that in that long-term report, which I hope you've all checked out, is that this past week, actually is the end of the prior week, but we traded above the 50% retracement. That has enormous ramifications for the weeks and months ahead. I won't go into the details about that, but check it out in that long-term report. We've met the minimum condition for a correction, what we call wave B correction, before the market is going to, should at least, roll over eventually to the downside to test or exceed the March low. So we may be sideways to up over the next several weeks. That's a possibility. We should not exceed the February high at all before we roll over and get to new lows. So unfortunately, I started to say things are probably going to get much, much worse before they get much better. And you should be prepared for that. Again, I covered that in the long-term report. And for DT Report subscribers, of course, we update that in detail every week. So let's take a look, though, at an immediate trade strategy. Since the last bear reversal, and let me put our indicators on here. I usually am looking at the ES. Since our last bear reversal here several days ago, or early last week, is we just went sideways. We didn't make a corrective decline as anticipated, just went sideways about the last 7 or 8 days, and now on Friday, the indexes made a daily momentum bull reversal. That usually indicates they're going to be sideways to up for 3 or 4 days, and in this case, good possibility of a new high. If they do that, just keep in mind that the maximum on the upside is probably around the 127, 162% external retracements of this last little decline, this 3-day decline, before we complete a weekly high. Here's our weekly, let me go to, well, here, I'll just put it on here real fast. Instead of, I got so many charts on here of various indexes. And this is just, even though it's the S&P, it's the same as the Dow, is the weekly momentum just completed week 2 of overbought. And we usually, within 4 bars, we make the price reversal. So we're very close to making a weekly high. And if we make a new high next week, that should be the weekly high. And it should be the end of a wave 5 wave advance, followed by a corrective decline lasting several weeks. But again, it will still all be within the context of a much higher time frame correction. So if we continue to do new highs next week, we should complete a weekly high around 24,623 to 25,080. If before, or without having traded above this past week's high, or this April 17th high, we closed below 23,018, that's what I got labeled wave 4, the question mark low, that would indicate that this is an ABC correction and it's complete. And again, a weekly high would be complete. So pretty significant coming up here in the next week. Let's take a look at one more setup that I think we got next week that's going to be a real good setup in the days ahead. Here's another great setup I think we're going to have by early this next week. This is gold market, one of my favorite markets to trade. Is that, boy, a lot of people are really bullish on gold because we made this new high a couple weeks ago with this just terrific advance, over $300 advance in just a few weeks off the March low. Well, more than likely, 2 weeks ago, we completed a weekly high. This past week, we made a what we call a weekly momentum bear reversal on a price momentum bearish divergence. That's with the new price high, but a lower momentum high, which is typically is a warning that we're making, in this case, a bearish reversal. So more than likely, we've completed a weekly high. The daily momentum is just a fast line's overbought, but there's some time factors that indicate within the next 2 days, that would be by about Tuesday, and following the next daily momentum bear reversal, we'll put the daily momentum in sync with the weekly bearish momentum to continue the bear trend and a correction against this 5-wave advance. So while many traders are very bullish on gold, more than likely, we're going to be sideways to down for a few weeks. So the reason I'm focusing on this is following the next daily momentum bear reversal is we're going to be able to position short with very small capital exposure. So even if we're dead wrong on this, on it continuing a bear trend after he makes the next daily momentum bear reversal, capital exposure is going to be real minimal. And our Trade Alert subscribers, we just exited the second unit of our long trade in gold and as well as the GDX on Friday's lower close, in consideration that more than likely we're about to make a corrective high and complete a weekly high. So here we are at the 240-minute data. This is how we can use pattern to help us identify the trend. It's not 100% for sure every time, but we've off of the what I got labeled a wave 5 April 14th high, we made a nice 5-wave decline in Elliott wave terms. That should be a wave A. We should be making a wave B correction followed by then a wave C that'll come down to test or exceed the wave A low. So again, we're pretty close to have completing a correction, which we call wave B. Then we should continue the higher time frame correction off of the September 14th high. That's what we're looking for next week. As always, I'm just looking for trade setups that have low capital exposure and high probability outcome, not forecasting. If you want to forecast, there's no reason to have a trading account. If you want to trade, then your objective is to identify conditions with a high probability outcome and acceptable capital exposure for you to take advantage of those conditions. That's it for today. I hope you'll join us at DT Reports. This is just going to be a incredibly volatile time in the weeks and months ahead. This has just begun in February and March. So it's going to be very exciting, good trading opportunities. But if nothing else, I want you to protect yourself in the weeks and days ahead, because as I mentioned, particularly in the stock market, it's probably going to get a lot worse before it gets much better. Robert Miner over and out for now.